All right, welcome back to Oral Pack Trading. My name is Joshua, and let's get straight into this video. Now, in the last video, we discussed psychological levels or support and resistance using psychological levels to map out key points on the chart. In this video, we're going to discuss how to enter into the market using your psychological levels, identifying the trends, using an indicator called the EMA, and also focusing on swing trading, which is the best strategy for beginner traders. Now I'm going to explain all of those things in depth in this video and give you guys a pretty decent or a beginner level understanding of how to enter into the market and to use all these different things I said. Now, when it comes to swing trading that I said earlier, I think that's the best trading strategy for beginner traders just because it's more slower paced and it allows traders to be able to analyze the market without being so jittery or being so hesitant in the market, right? So it allows you to make adjustments. It allows you to see how the market is operating and how price moves when you're trading certain pairs. Now, there are certain pairs that are better for swing trading. For instance, the Euro USD is a great pair for swing trading. It has a lot of movement. It's pretty volatile, but it's slower moving and it has a lot of volume and it's the most traded pair in the world. So it's a great pair to swing trade. There's also the British pound USD and also the US dollar Japanese yen. The US dollar Japanese yen, you can day trade it, but these are also good swing trading pairs. But in this case, we're going to focus on the Euro USD. So let's get into this. Let's go back in the past here. Yeah, let's continue and see where price left off. So I went back because the last place that I was before was, okay. So we're going to stay here. This is December 20th of 2019. So this is pretty far back. All right. So the first thing we're going to do is map out our psychological level. So in this case, price is at 1.10686. So I focus on the first two numbers at the back of the decimal. So that's 1.10. All right, I'm going to change this to blue. So 1.10 will be our support. Now, when it comes to your psychological levels, you don't have to have a lot of psychological levels. You can just have two. But for this example, I'm going to have 5 psychological levels just to give you guys, especially beginners, a good visual of, where the market is and just different key points that you can trade off of. So I'm going to go 1.10. So from below 1.10, I'm going to put 1.09. And then above 1.10, I'm going to put 1.11. 1.12. And 1.13. And then I'm going to put in our mid levels. So between 1.12 and 1.13, that'll be 1.12.5. Between 1.11 and 1.12, that'll be 1.11.5. All right. And between 1.10 and 1.11, that'll be 1.105. And between 1.9 and 1.10, that will be 1.095. All right, so now we have our psychological levels, right? Our main levels and our mid levels. Now the next thing we're going to do is that we're going to go to this area where it says indicators, metrics, and strategies. We're going to click on that. And in the search bar, we're going to type in exponential moving averages. All right. And we're going to click on this one by Merck 15. So as you can see over here, there are plenty of different exponential moving averages designed by different people. But this is the one I like the most by Merck 15. So we're going to click on that. All right. And then you can see all these different lines on here. Okay. Now what you're going to do is that you're going to go to settings. Right. We're going to go to style. And then we're going to click off EMA 3 and EMA 4. So what that does, it gives us 2 lines because that's all we need. Now over here, I'm going to change the color and the thickness. I'm going to keep my thickness to be thin just because it's just cleaner on the chart. But if you want your thickness to be bigger just for visual purposes, then you can do so. Here. All right. And then for the input, I'm going to keep EMA 1 to be 9 and EMA 2 to be 14. All right. Okay. Now, what that means is that when you have the EMA 9 and EMA 14, what it does, it tracks the closing of the market for the past 9 to 14 days, right? So it helps us to analyze what the direction of the market is going to be for each specific time. So in this case, the blue line, it is the 9-day. So when the 9-day is above the 14-day, that means price is biased to the upside. So again, when the 9-day, which is the blue line, is above the 14-day, which is the gold line, it means that price is biased to the upside. Now on the flip side, if the 9-day is below the 14-day, that means price is biased to the downside, right? So again, when the 9-day, which is the blue line, is below the 14-day, which is the gold line, it means that price is biased to the downside, right? So that gives us a pretty good, analysis or direction, helps us to understand the direction of the market for the past, for the past 9 to 14 days, right? But here's the thing. There are some people that look at the EMAs and say, okay, if the 9-day is above the 14-day, that means price is biased to the upside. I'm just going to go in for a buy. Do not do that. You want to make sure you have checkpoints that you can mark off before you get into a trade, because these are lagging indicators. That basically means it takes time for price to be able to move in the direction of the overall market. So again, we have checkpoints for us to understand what the market is doing or when we should get into the market. So we have an A setup, a B setup, and a C setup. But right now I'm just going to focus on the A setup because we always should be looking for A setups. So for an A setup, you need to check 3 areas of confluence, right? So the first thing is to find what the trend of the market is. So if the trend is moving either upward or downward, okay? So let's say we see that price is more biased to the upside. The trend is to the upside. Okay, that's one area. The next area is, which is not in specific order, but I would just go find the trend first. The next thing I look at is my EMAs. Is my EMAs biased to the upside? Is it, the 9-day above the 14-day? Is that what it's doing? And then the next thing is that I want to see if price matches up with the overall trend and matches up with my EMA. So is it moving above a cycle level, right? Is it moving in the direction of what the trend and the EMAs are saying? And if all 3 areas are focused in one area, then that is an A setup. Now, that is what we should be focused on an A setup for the most part. All right? Now, over here, the first thing we're going to do is going to find our trend. All right? So when you're swing trading, you're usually going to focus more on the 1 hour, 4 hour, the daily, and the weekly time frame. So those are the time frames that we are focusing on for the most part for swing trading. When it comes to other kinds of trading, then we use different time frames. But for swing trading, we're focused on the 1 hour, the 4 hour, the 1 day, and the 1 week. So if I look at what the overall trend is, we can see there's a huge trend from over here that's like, yeah, price was moving down for actually for a long time. But I'm gonna focus on the immediate trend. And from the immediate trend, it looks like price did have a downside, but now it's picking back up, right? So what I'm going to do is that I'm going to go back here and look at the previous lows. I'm going to get my trend line, and I'm going to put it right here. So what it's showing me is that price is making higher lows. So you can see this is one low, this is another low, and there's another low here. So these are higher lows. So what that shows me is that, okay, even though price had, a pretty downward move in the beginning, it looks like price is picking back up. All right. So that's on a daily time frame. So I'm looking at the daily time frame to look at the overall direction of the market. right? You can also look at the weekly time frame to look to see what's happening here. So we can see that price is, it's still, a little choppy over here, but for the most part, it looks like it's picking back up to the upside, right? Okay. So the first thing I'm going to look at, I see that the 9-day is above the 14-day, but we can see that price is not giving us that third area confluence. So we do have the trend, which is going up. We have the EMA that's saying that the 9-day is more biased to the upside, but it's a little weak, right? And we see that price is starting to retrace. So I'm not going to get in yet. I'm going to focus on getting in when price reverses back up. So I'm going to monitor that on the 4-hour time frame. And let's see here. So my goal is that I have two areas that I'm focused on. I'm focused on price coming down to where the trend line is around 1.105 over here, or I'm waiting for price to break above 1.10, right, to make a higher low to 1.10. Okay. So that's my those are my two entry points. So I also want to say this: just because you have a setup, it does not mean that price won't go against you. It just means there's a higher chance that price is moving in the direction that you believe is going to move in, because you notice that your trend line, your EMAs, and price is moving. It's moving in the right direction. Okay, so let's just say if I try to get in at 1.10, price is looking good, and it reverses back, right, and it stomps me out. Then my next entry will be 1.105, and if I see price balancing at 1.105, then I'm gonna try to go in there. But if price doesn't, hold, if price is not underpinned at 1.105 and it breaks below, then I'm going to reevaluate the direction of the market, right? So those are just that's the way you should think as a trader, to analyze what the market is doing. And swing trading really helps you to do that, because it lets you see the patterns in the market, see the past patterns in the market, so you can make good decisions for your future trades. All right. So I see, okay, again, the past is telling me that, okay, price is being underpinned, is making higher lows. So what I'm going to do is that I'm either going to wait for price to get to 1.105 or wait for it to break above to 1.10. And then I'm going to analyze all 3 areas of confluence before I get into a trade. All right. So I'm going to press play here. Right. And also you can adjust your speed when you're pressing play, like for replays. You can adjust your speed here. So I'm going to go between the 1 speed and also just, doing it manually, just so I don't miss my entry point. All right, so I'm going to press shift. All right. All right, so it looks like price is, okay, making some, again, more higher lows here. So my entry will be at the 1.10 area. Right, so yes, I'm seeing price is moving upwards here. You see that it's being underpinned. So let's see here. Okay, so that's a pretty strong green candlestick. So that's what I'm looking for. And I can see that the 9-day officially moved above the 14-day, right? So that's signifying an upward move. So I'm going to go look at my all 3 areas of confluence, the trend upward, the 9-day, if you go look closely, it's above the 14-day, and price is moving above the psychological level 1.11. So it's showing me show me all 3 areas of confluence is, well, it's doing what it's supposed to do. So that is an A setup. So I'm going to use my long position tool. So this won't be an exact trade. This will just be like, this is an analysis tool to let you know that, okay, if I did get in here, then this will be my take profit and my stop loss. Okay. Now with swing trades, my stop loss is usually 40 to 50 pips, so pretty much a half level. So let's say if I got it at 1.10 exactly, my stop loss would be at like 1.1060 or 1.105. You want to have a lot of room when you're swing trading, right? So you don't want it to be very small stop losses, because that can mess up your trade, right? That's more for day trading, which we'll get into that in later videos on how to adjust your trading strategy, adjust your trades based off your trading strategy. But in this case, we're going to have the stop loss 40 to 50 pips below, and also I'm going to monitor this previous overall low. So this is a higher low that I was talking about before, so I'm going to put my stop loss below the higher low. Yeah, so that is just a key point. So if price breaks below there, then you know that, okay, that this was not a good position. But so this is a great, but because price seems to be balancing at this specific point, especially on the 4-hour time frame, then it shows me that this is going to hold up nicely, right? For the most part, right? So if I'm risking, let's say 40 to 50 pips, then I want at least 100 to 150 pips. And in this case, we're going to go for the 150 pips mark, right? So that is what I'm going for. So I'm risking 40 to 50 pips to make 150 pips. So that is how you want to analyze your trades, or that's how you want to go about your trades. You want to make sure that you're risking less than what you're making, right? So the best traders in the world are like have a 70% win ratio. That basically means they win 70% of the time and they lose 30% of the time. So, but there's also traders who are successful who win 30% of the time and they lose 70% of the time. And I know that doesn't seem like it makes sense, but here's how it works. This is where good risk management comes into play. You want to make sure that whatever you're risking is less than what you're going to make. So even if you have a few losing trades or more losing trades, and you have that one winning trade can eclipse your losing trades because what you're risking is less, but what you're making is more. So in this case, we can see we're risking about 40 to 50 pips to make 100 to 150 pips. That is a significant difference. So my thing is that if you lost like two trades, right? If you lost two trades in a row, but you won one trade, so in this case 150 pips, you still would be in the profit, right? So that basically means for if you lose two trades and win one trade, you'll still be in the profit. Now, if you win your first trade, hey, congratulations. That is even better. But that's how good risk management works. Is that if you lose two trades, but that third trade you win, you still are profitable. And I want as new traders, or just as new traders, you should focus on that. Focus on having good risk management, having good lot size positioning, which we'll get into in a later video. And that will make you a successful trader because you want to make sure that you have good entries, that you understand how to look for A setups, and then be able to trade from there, and you will be successful in the long run. All right. So this will be my entry right over here, and this will be my stop loss. So I'm going for my goal is for 150 pips. Okay. So, and if I end up coming up short, if I even go close to it, then I can just take my profit. Now, mind you, this is a swing trade, so it can take, usually swing trades take 2, 3, or more days to reach its target. So it allows you, it takes patience, but it does allow you to be able to make money and do other things. So you're not, you don't have to stay in front of the computer for too long with swing trading. And you're able to analyze the market and see what price does in the midst of you being, profitable, right? Or not, but it does allow you to be able to analyze the markets without being so jittery and just to see exactly what's happening. But yeah, let's get into the trade and let's see what's happening here. Okay. Ooh. So we got into a really good position. So I said, yeah, my goal was to either get it at 1.10 or 1.105, but we see that price is moving up nicely from 1.10, and yeah, I mean from here to here is almost 100 pips, right? Because we got in a little bit late. I mean, it's not bad. We got in 10 pips above 1.10. So, but yeah, that's from here to here is about 90 pips. So we're doing pretty well. And at this point, once you get high enough, you can always break even. So what that means is that now you're not losing anything. So let's say if price happens to, let's say you're not a friend of the computer and price does reverse against you, then at least you don't lose anything, right? But again, this is a swing trade, so there's a high chance if price is moving firmly in your direction, then it would take days, or something happening in the news for price to just fully go against you. But so far, we got in on Thursday. This is a Monday, so this is already a few days, like 3 to 4 days by itself, right? Not include, I mean, if you want to include not including the weekend, you can say that this is about 3 days. Okay, so but let's see. Let's press play and see what it does. Okay, awesome. So what I'm going to do is that I see that price is close to 1.125. Now I'm going to, let's just say, I'm going to adjust my stop loss to make sure I capture most of my gain, because my goal was to get around this area to make 100 to 150 pips. So far, this is about like let's say 130 pips, right? So this was over from here to here is about 90. This is about like let's say 130 pips, okay? I'm going to put my stop loss. So let's just pretend this, let's pretend that this red line is my stop loss. So the red is going to signify the stop, okay? Now it's telling me that if price goes here, I keep about 100 or over 100 pips right over here, okay? Now, if price does hit 1.125, then I get my full 150 pips, okay? So, but at least I capture most of my gain, and I'm not risking anything. So I have pretty much all to win doing this, right? So I'm going to press play, and let's see what happens. Okay, so hit my stop loss. So I took my profit right out there. It's like about 109. Let's see, 100. So that's like about 108 pips, which is pretty good. So yeah, we made a 108 pips. This is a pretty successful trade. The goal was to get the 150, but we still got 100 pips because our goal is always between 100 to 150 pips. But yeah, this was a successful swing trade. Now again, this was successful because we analyzed what an A plus setup, what an A setup is, right? You can call it an A setup or A plus setup. It doesn't matter. But yeah, again, just because you have an A setup, it does not mean price won't go against you, because there's still other factors like fundamental data with the news and other things that can happen inside of the market. But when you focus on having A or A plus setups, it helps you to make better decisions or gives you more confidence that the market is going to move in your direction. So yeah, guys, I hope this video was helpful. I hope you understood how swing trading works. And yeah, I'll see you in the next video, and let's create generational wealth together. See you guys.